Here we have the 30-minute price chart for Google, Alphabet Incorporated, stock ticker GOOG. Here we can see that the stock is trading under some fairly significant selling pressure, and this has been the case since the major sell-off that we saw in the market during last Thursday's trading period. For the most part, the stock really has not been able to recover these losses, as we can see here. This would be the Thursday sell-off trading period here. And then we really didn't see many major bounces here. We saw kind of a continued sell off here in a series of lower highs and higher lows. So for the most part, this does kind of fall in line with with this thesis that some technology stocks are going to start to gain more than others. Into the later parts of this summer trading period. I don't think that we're going to be seeing kind of a uniform price movement within the tech space. I think that some stocks are going to start to fare better than others. And this is probably one of the names that's going to start to trade under a bit more selling pressure when compared to a name like possibly Apple. Drilling down here, we can kind of see where a lot of this actually took place, because this did actually unfold during some fairly predictable technical price zones here. So as I said before, here's this kind of series of red candles here. This would be the Thursday sell-off trading period here, and then as we can see, the dominant price move that I'm using here really comes from the July 1st lows for this stock, GOOG, which posted at 182.73. And then we extend this to the all-time high for the stock, which came in during the July 10 trading period, when the share prices were trading at roughly 193.30. As we can see here, the stock did try to find some support near the 618 retracement. This typically is the Fibonacci retracement zone that I point to most often as being the most significant, most important Fibonacci retracement zone. And the reason that I say that is because this is largely the 618 Fibonacci number is really what forms a lot of the Fibonacci sequence itself. So it kind of defines a lot of these numbers. And as we can see here, this is really where the share price attempted to find some support. We saw some brief spikes lower here. I should just make this a bit clear here. The 618 retracement would be this kind of light green line here. I'll kind of just underline this part of it. This price zone comes in at 186.82. So we can say, roughly 186.80 is the 618 retracement here. And that's the kind of light green zone. And as we can see here, the stock did attempt to really try to find some support here. There were some buyers that probably entered into the game here, but we did start to see some spikes lower during the following trading session, the Friday trading session. And then we did see a bit of a bounce, but this didn't last very long. So mostly what I want to point to here is the fact that we did have a confluence of events here, a combination of technical indicators appearing in the same area. So specifically what I'm pointing to here is this rising blue line. This is the 200 period exponential moving average. So as we can see, it's not exact with the 618 retracement level, but it's very close. These are roughly coming in at the same area. And as this moving average continues to rise, I mean, we do come into fairly close contact with it. This 200 period EMA, exponential moving average, really comes in at around 186.70. And then when this final break occurs, we can see that, there's really only about a 20-cent difference here between this moving average and the 618 retracement. So, we did see a period of sideways consolidation in this area. We did see a bit of a bounce. I do think that there were buyers that were entering into the market here, trying to kind of pick the bottom and get the stock at a little bit of a discount. And we did see a strong rally here. I mean, this is a strong green candle. This would be called a bullish engulfing candle. It completely, it's much larger than the bearish candle that preceded it. It's much larger, and it's got a very solid body on it. That's a bullish chart pattern. It's a bullish candlestick pattern. but these gains were somewhat short-lived. We really didn't manage to hold above this exponential moving average cluster for very long. That would be this, collection of colorful lines here, sloping lines. And we did see a break above here technically, but it really didn't hold much. This is a bit of a false breakout, in my opinion. And then we're just sort of oscillating around the moving averages. And then once this 618 retracement zone gets tested again, even though we've got this 200 period exponential moving average here, it's not enough to hold support. And then we do see it, and then this is when we see the major, sort of the major sell-off here. This is kind of a good, example of the Fibonacci retracement zones at work here, because we do see that the market really did try to hold itself here, and then ultimately it did take a more significant sort of sequence of selling pressure activity in order to force prices through here. Like we did need to see more intense selling pressure in order to kind of finally break through this area. And then once this did happen, the move was a bit more forceful, and we saw prices kind of we saw the share prices kind of accelerate to the downside. There really have not been many bounces here. You can see a couple of green candles here, but they're very small. This is not much of a bounce. But as you can see here, we are also trying to bounce near the 786 retracement, 78.6% Fibonacci retracement of this same move. So prices are attempting to stabilize here, but I'm not very confident that this is actually going to happen because the bounces are minimal. The bounces are minimal. We're below all of the exponential moving averages. And then if we look at the relative strength index down here, the indicator reading, this purple line, we can see that the trend activity here is clearly bearish. In addition to that, there's a lot of bearish signals here. In addition to that, we have a bit of a bearish divergence condition that did develop here. This was a warning signal that did really develop before the share price here kind of collapsed. As we can see here, the relative strength index itself is making a series of lower highs as the stock itself is making higher highs. This is actually an all-time high. So, this is a bit of a warning signal here. This does suggest that these moves to the top side are not sustainable. So, we can really point to this region here, sort of on Wednesday. We can see that the stock is making all-time highs while the indicator is posting a series of lower highs. So that would be referred to as a bearish divergence, and it is a fairly major, signal to the downside. It's a signal that a sell-off is likely to occur because it suggests that this upside price move is not sustainable. It's not being confirmed by the indicator reading. So this is it's an interesting price chart as far as learning how to do all of this. Um, there are some lessons to be learned here. We're attempting to find some support here, but this is such a weak bounce. I'm really not expecting prices to hold here. And if we do see a break below the 786 retracement, I would expect to see a complete retracement of this entire move, which would mean that we would give back all of these gains that were seen during this entire bullish wave here, and then ultimately force a retest of the lows at 182.73. So this would be the current market update for Alphabet Incorporated, Google parent company, stock ticker GOOG.